What's going on, traders? Welcome to another Babypips tutorial. We have completed preschool, kindergarten, and today we're about to begin on elementary. And here is a course outline: support and resistance level, Japanese candlesticks, Fibonacci, moving averages, popular chart indicators. And down, when we look at the outline in detail, we have all these here to grade 3 and grade 4 and grade 5. You can see it's a lot to cover, right? So let's dive right into it, but before we begin, let's roll the intro. Welcome back, guys. So let's discuss support and resistance. What is support and resistance? Support and resistance is one of the most widely used concepts in forex trading, and everybody have their own ideas what they think about support and resistance. So let's learn, right? Let's learn the basics first. Let's look at the basics first. Look at this diagram right before you, right? This is the support and resistance line. As you can see, the diagram shows a movement to the upside down, and an upside. And if you can see very well, prices rose from this level down to this high here, and it came back down, found support, went back up to another resistance level, came back down again, found support, and moved back up. So what actually is happening here? See, prices started from this level here, right? And so it rose back to this, up to this point, this high point. And what happened? The prices fall, right? Drops to this point where you see support and went back up. Now what happened here? When it came to this area where you see resistance here, right? It started from the low and it went to a high. There are people right here, right, who are uncomfortable with the current price, this price here that the market rose to, right? And so they initiated sell orders, and the market, they forced the market to fall down. However, prices did not drop. Prices of the market did not drop down to this beginning level right here. It stopped halfway, and then there are more buyers, those who initiated the buys, right, who made these prices rise from this low to this high. They were here with other buyers as well, teamed together, and they initiated more sales, right? They executed more buys rather. And what happened? Price rose back up higher than this previous high where it was previously rejected rather. And when it got to this new high here, guess what happened? There are also sellers in this area of the market who are uncomfortable, right, with the prices of the currency pair at this level. And what did they do? They initiated or executed sell orders. What happened was that prices fall back down. However, this time also the prices did not drop down to this level. It stopped here. Why? Because the buyers stepped into the market, and more buyers stepped into the market, and they executed more buy orders. And what happened? Prices went back high up, higher than these two previous high, right? And here again, sellers came into the market, and then they executed more sell orders, and price fell back down at this point. So basically what is going on here, we see up, down, up, down, up, down. This is the structure of the forex market, of every forex market or forex pair you are going to trade. This is basically the structure, and as you can see, we are going to discuss more. But prices will always go up, come back down, go up, and come back down. Why? There are either surplus of sellers at a particular level or surplus of buyers at a particular level. And if there are surplus of buyers, right, at a particular level, the prices of the market will be rising up. Whereas if there are surplus of sellers, the prices of the market will be reversed. It will be going down like this, something like this. That's how it will be going down. That's when there are surplus of sellers in the market. So let's just move on, right, and learn more. So how do you plot support and resistance level? Now look at this chart right here, right, and look at the chart. You see something very interesting. Prices fell from these highs after trading for a very long time high up, right? After prices traded for a very long time high up in an uptrend, right? You see, it's going up. Prices broke the trend line, right, and started falling back down, right? And it came to this area right here. And what happened? Market found support. Why? Because prices failed to create a new low, right? And what happened? The buyers stepped into the market and they bought the price back up. Sellers were like, no, we're not going to take the price at this level, it's too much for us. And they executed sell orders and prices went back down. And buyers again came here and they were like, no, we're not going to, this is the previous low where we bought, we want to buy it again. And what happened? They executed more buy orders and prices was finding its way back up, continuing like that. So this is basically the tug of war that goes on in this forex market, and this is what support and resistance is all about. Now the point, the lower point where prices, right, rose back up is called the support. As you can see, it came from the high, from the top level downwards, right? And here the market, after it bounced off at this first time, right? So if you're a trader, if you want to take a trade, you can execute buy orders right here. Sorry, that's too much. You can execute buy orders right here, right? And you can take your profit in the market here, and you can see prices came back down again, and prices came back down and found support here at this key level, because buyers stepped into the market and they bought the price and it just went back up like that. So this is basically support right here, okay? And then resistance level is at the top because prices fell from the highs down to the low. Take a look at this area right here, right? It came, boom, price was rejected, it went back again, boom, prices was rejected, and what happened? You see prices falling back down, and it got here, boom, price was rejected, went back up, boom, again, price was rejected and it went back up again. So this is how it is. So your highs, right, your highs is the resistance level, okay, and your low is the support level, okay? So let's move on. I hope you understand what support and resistance mean, okay? So how do we truly know if support and resistance were broken? Now, good, look at this diagram very well. How do we trade the market? We buy the market when it comes to support area, right, or support level. And if the market falls downwards below the support, we say the support level has been broken. However, at this point right here, you can see the support level area has been broken, because this is where it's first. Oh my goodness, what's going on? At this level right here, prices found support first time, it came back again to retest the support second time, and then it came back again to retest the support, right, a third time. Now for many traders, they will execute their trade orders. Once the market gets right here, they can execute their buy order. But what happened? Prices drove back down. This is a break of structure. However, because prices return, right, rallied from this low down upward rather, right, we can see this price level area right here is actually support, and we can consider this a fool's breakout, right, just to get people into the trade to sell, and then they'll manipulate the price back up again. So when you see something like this is not a break, because price did not continue to trade lower, rather it found support from this low right here. So this is actually a confirmation that this level is actually holding. So that is what it is all about. So how do you trade it? You actually trade when you have good confirmation that prices has reversed and is trending back up. So you can enter the trade right here, enter right here, and you wait for it to come back down. You can enter here, take a profit here, and come back down again. You can enter here, take a profit here, and take a profit here again. Once it's creating higher highs and higher lows, and we'll get to that as the course continues. So that's how you trade the support and the resistance. This is not the in-depth discussion about support and this is just basics, right? So understand that. Now, how do you plot your support and resistance level? What this place is actually telling us is that it will be better for you not to plot your support and resistance level, right? This way, unless you know how to really plot it. Now, I'm going to show you how to actually plot your support and resistance level. Okay, guys, so let's go to the charts right now. I have my chart right here. This is Euro USD. So basically, what you are seeing here on Babypips, they are saying to plot your support and resistance level correctly. You should turn your chart to the line chart, right? And then you actually correctly see the areas where prices close correctly, and that's actually how you plot your support and resistance level correctly. So what you do is come to your line chart and then go to insert, take the shapes, and then draw your support and resistance level. As you can see, the prices didn't close above this area here, so this is our resistance level, and another resistance, another resistance level. Okay, furthermore, and remember this is the 4-hour chart, resistance level. Okay, exactly. And here we have support, and here we have support as well, and here we have support, and here also we have support. So basically, the areas where you have most of the peaks and the valleys, they are your support and resistance levels. Okay, remember we discussed earlier on, we said the market goes up and down, up and down, up and down. When it's coming down to pick more orders or more buy orders, right? More buy orders. If it's going up, it's coming back to pick more sell orders. Just that is basically how the market goes. And so having drawn your support and resistance level, right, like this on the line chart, switch over to your candlestick chart, and what do you see? It is perfect, right? Beautiful, right? So this is basically how you draw your support and resistance level, and now you can confidently say this is first time, boom, after 4 hours, 8 hours, right, 12 hours, 16 hours, the market failed to break this high, and what happened? Prices went down, started coming down. This will tell you very well clearly that this area right here is a strong resistance level. And what you do, you know that if prices come to this area again like it did this time here, you can confidently sell the market, right? And that is what it's doing, it's trying to go back down. So that's how it is. And if prices somehow manages to fall back down to this area right here, because we know previous history from this area right here, and again we know that prices were unable to break below these lows, and this is a very strong support level, right? So if prices get back to these lows right here, you can confidently take the buys somewhere here, because previously prices have been unable to break this low. And what more do we have? We have something like this, a trend line. Right now it is not actually very perfect. Let me use this to draw it. Let me use the trend line right here to draw it. Come on, man. Okay, you see what do we have? We have an uptrend, right? We can even come here like this and draw it this way. We have an uptrend. Does this shows that we are in a downtrend? No, we are still in an uptrend. The market only came to these previous lows, right, and found support and went back up. So this is basically how we draw our support and resistance level. So let's go back to our chart. Considering other tidbits about support and resistance level, so what other things should we consider? that there are major support levels, there are minor support levels, there are also major resistance level, and there are minor resistance level. How do we know this? Let's go back to the chart and I'll show you real quick. Okay, look at these levels right here. You will agree with me, let me use this my pen too. You will agree with me that this is a resistance level, right? However, this is also a resistance level, but not a major resistance level. Why? Because prices, even though it fell back down, it found support here at this area right here, and prices rallied up, and it's created a new high resistance level which is higher than this one, right? And then what happened? Prices fell back down and found support again in this area right here, consolidated, and prices went back up again to a new high which is higher than this previous high. So this area right here is a minor resistance level. Why? Because we have a new resistance right here, and this is also a new resistance level because it is higher than the previous one. And so that area whereby prices will fail to break and price continues to fall back down from the highs, that peak is the major resistance level. So all these previous ones right here, 1, 2, 3, they are all minor, but right here at this area it's a major. Why? Because what happened? Price fell down, right, and did not get to this high, and it struggled to even break these previous highs, and it consolidated right here and came back again and fell back down lower, and it was unable to get to these highs, right, and it fell down, came back again to rotate it, and it fell downward more. I don't know if you understand this, but this is basically how you understand minor highs, major highs, right? Now you can also find the minor resistance right here, when the market is creating higher high, higher low. This is new high, a new high, a new high. All these levels right here, they are minor resistance level. All this right here, all this right here, okay, minor resistance level, minor, okay, and all that. So we also have minor support levels. This is an uptrend market, so but we can find a downtrend market right here. Let's look at this this area here and see what we've got. Okay, you just look at it right here and use this as an example. So you see, after prices started trending downwards, prices got to this point, found support, came back up, went back down again, found support, minor, came back down, another support here, resistance here, and came back down. So how do we call this level here? Here, right? And here, we call these our minor support levels, right? Sorry, minor resistance levels as well. Minor resistance level, right? So when the market is trending up, that's when you have your minor support levels. So like here, take a look. Prices rose up, came back down, found support here, created a new high, came back down, found support here, a new high, came back down, found support here, a new high, right, and came back down, it found support, minor support, went back up, and it found a major support here. Twice tested this area before bouncing back off and up and up again, and it found resistance here and it's coming back down. Okay, so understand, at the bottom, right, at the bottom you have support, right? No, that's the support. Here, okay. However, at the top you have resistance because it's falling back down from this area right here. So basically, how do you enter the market? You only enter for a buy when the price has come down, and you only enter for a sell when the price have reached its peak. Okay, so when the market is dipping like a V, you enter here, and if it's falling, right, you sell here. If it's rising, you buy. Okay, these are not the we are not talking about entries, we're just talking about the basics. So just get this concept in mind as we move on. Okay, so let's move on to the next lesson, trend lines. So what are trend lines? Look at this diagram again. We are not reading, I'm explaining everything. Trend lines are used to determine the direction of the market. It helps us to easily know at which direction the market is headed, right? So let's go back to our chart and look at, I drew this trend line here previously, right? So I'm going to draw it again. As you can see, the market is moving in an upward direction. So when it's going up, we see the market is trending up. Okay, the overall direction of all this we have just drawn here is to the upside. It doesn't look like this, no, but rather it looks like this: up, 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 right? So what do we use the trend lines for? We use our trend lines to determine direction at any given point where we want to start trading. And so let's say you woke up in the morning, you want to trade, and you saw the market do this, right? Can you really say this is a trend? This area right here, that this is a trending market? No, you can say this is a ranging market. However, you can still trade it, right? But if you dig deeper, right, if you're a professional trader and you go deeper, you can understand that yes, in between a ranging market, you can still take a trade. However, that's not what we're going to discuss right now. So let's see how to use our trend lines. Let's draw a trend line right now and an uptrend. Draw your trend line. Make sure the lines you are drawing, right, are touching the bodies or the wicks of the candles. And even to draw it more perfectly, you can use our earlier format, right? You can switch to a line chart, right, and draw your trend lines. Make sure they get close to the valleys or the sharp peaks of the line chart. Okay, and then switch over to your candlestick chart, and you see it's more beautiful. So what happened right here? The market is trending up. However, in this region right here, it only came back down to test these previous lows, okay, before it finds its way up. So you will not always find support lines that are very perfect, and you'll not always find support lines that are, resistance levels that are perfect, and support lines that are perfect. They will not always be perfect. The market will not do what you want in your heart. Just understand that the market will only do what it wants to do. Your duty is to recognize and to understand what is happening before you get into a trade, okay, so that way you minimize getting into too much early trades and all that. So this is basically how we draw our trend line when it's going up. Let's draw another one when it's coming down, right? Okay, let's draw another trend line when it's coming down. Right here, the market is coming down. Okay, let's use our line format. So what do you see? It's coming down. Okay, even though it touches the bodies of these candles, that's no problem. It's coming down. That the market broke this trend line. Does that really mean it has broken? I mean the direction of the market has changed? No, it only came back up to these highs here to test these levels of the market, and that's it. And when it couldn't break back higher, it fell back down. So it is basically a downtrend. So this is just how using the trend line is to draw a higher, to determine if we're in the trending market up or down. Okay, and see very closely here, this one is going up and this one is coming down, right? Let's see if we can find a sideways market. Yes, we have one here. Look. No. For a very long time, the market was bound in this area right here. Did not go up, did not come down. So this is not a trending market. This is a sideways market. Okay, so let's go back to our class. That is how you should be able to draw your trend lines to know if if you are in a trending market to the upside or to the downside. Basically what we have done, right? We drew an uptrend, we drew a downtrend, we drew a sideways trend, and this is another uptrend, this is a downtrend, right? So there are three types of trends, exactly what we have discussed. One uptrend, another one downtrend, another a sideways or sideways trend, which is a ranging market. Okay, so there are some important things to remember using trend lines in forex market. What are the important things we need to remember? And where is it? Let's just read it. It says it takes at least two tops or bottoms to draw a trend line, but it takes three to confirm a trend line. The steeper the trend line you draw, the less reliable it is to be, and the more likely it will break. Like horizontal support and resistance level, trend lines become stronger and more times stronger the more times they are tested. Okay, so I do not know if you understand that. It says the more times the trend lines are tested, the more stronger it becomes. So boom, this is the first one here, second one, and the third time. Let's take another look at this. Where is it? Okay, so what did we just read? It said the more times it is tested, right, the more stronger it becomes. So it tested it first time, we're in a trend, right? Second time it came again, we know, wow, this is actually a trend. But when it comes to the third time, it says this is actually a very strong confirmation that you are in an uptrend. Now at this level it broke, but have we left the trend, the uptrend? No, because it found support here. Okay, so you have to use logic. Okay, we are still in an overall uptrend. So it found support here first time, it found another support here second time, and we drew in another trend line, and what happened? Boom, it did not come. Now it came second time, right? 1, 2, and then it came up and it's reversing now. So if it bounced back up the trend line here, we can see, yes, this is a very strong confirmation for us that we are also in an uptrending market. So what's next? Let's move on in our school. Trend channels. So what are trend channels? Like we know channel, right? You have to go in between through it. So a channel is a trend channel occurs when prices move in between two parallel lines in the price of a chart. So you can see in an uptrend, the prices of the market, prices were just in between this up line and this bottom parallel line until it broke, right, and started to trend down, moving inside this between these two downward trend. uh, let's choose a pair. Get out of here. So what pair are we going to use? Let's see if we can find a trend channel. Of course it's here. Okay, so at this area here, we actually spot a trend channel, right? Up, up, and it broke. Okay, and then here we have the downward trend channel. Okay, until finally it broke. And then right over here, these are 4-hour candles, friends. Market traded inside of it, sideways. No trend to the upside or to the downside. Okay, so this is basically how you draw your trend channel. Okay, it's as simple as that. Plus, this is the basics. Okay, you should be able to know how to use your trading view, but we'll still have our we are still going to bring up tutorial videos on how to use your trading view. So friends, this is how to draw your trend channel. So here, right here, you know the market is trending up. Okay, and right here, you know the market is trending downwards like this, and right here it's going up like this. It's as simple as that. Okay, so what you can do, you can sell here, you can sell here, and you can basically find an entry here. All these are rejection levels, and you can buy here, buy here, buy here. Okay, buy here, take your profit here, and all that. So here is kind of consolidation. Market's trying to reverse. You know, found a double top here. I mean, first top, second top, and all that. Hope you understand. I'm trying to make this video very short and fast to the point. So, friends, this is how our trend channel work, and we have just now we have drawn ascending channel, descending channel, and horizontal channel, right? And they consist of higher lows. I don't know if we mentioned that, but let's just look at the chart. It consists of higher lows, high. Okay, so this is the higher high, H, H, and here is the higher lows, H, L, and it's at this point you enter the market. At the higher lows, you enter the market as a buy. At the higher high, you do not want to buy here, because suppose you buy here and prices start coming back down, you'll be in a huge loss. Okay, and if your account is not strong enough to hold this trade for a very long time, you might just find your account, you know, blown. So that is how it is. So it creates higher high, higher low, higher high, higher low, higher high, and higher low. Okay, and for a downward trend channel, right, like this, the market creates a lower high and a lower low. Sorry, friends, not here. Sorry, this is a lower high. This is a lower low at this point here. Okay, here we have the lower low. Here we have the lower high. Here we have the lower low. Here the lower low, right? And here we have the lower high. Do you know why it's called the lower high and the lower low? Now look at this. This area right here, right, is lower. Is lower than this one. So this is the lower high. This is higher than this low. The market is trending downwards. Remember. Okay. Let's draw a clean chart. A clean chart. Okay. Delete everything here. The market is basically making up, down, up, down, up, down, up, down, up, down, up, down. Okay, and we have a channel like this. It's not going to be perfect, right? But this is a higher high. All these, they are higher than the previous highs. Okay, higher high, because they are higher than the previous high. This is higher than this. this right here is higher than this, this is higher than this, and this is higher than this, right? And then we have the lower highs. They are the lowers of the highs, right? Because they are lower than the highs. Here is lower than this one, here is lower than this one, like that. And so if you have a downward trend market, right, see the market is making something like this. We have our trend line to the shining to the up or the bottom like this, right? So this is the what? Lower high. And here is what? Lower low. Lower high, lower low, lower high, just like that. Okay, so that's basically how the market works and operates. So we have our lower highs, lower highs, lower low, lower high, lower low, previous lower low, lower highs, lower low, right? What did I just say? I'm sorry, guys. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, and then this is the downtrend market, so we can say lower highs, lower low, lower highs, lower low, lower highs, lower low. Okay, so that is that for you. Okay. Sorry, I was saying lower high, lower low. Okay, so what is important things to remember about drawing trend channels? Okay, like drawing trend lines, do not ever force the price to the channels that you draw. Okay, like I'm trying to make it perfect. I want to draw a perfect trend line. Let me come on here. Let me make it like this. No, keep it simple. This is the trend line. The market is trending up. Okay, first one, second one, third, fourth. Okay, let's keep it close. Okay, remember, if you're finding it difficult to plot it, just go to your line chart, right? It's simple now, right? So this trend line must not bend like this. No, it's still a trend line. Just get the idea. It's still a trend line. Okay, this is how you should be drawing your trend lines. Okay, friends, do not try to force it. That is the admonition. So do not ever force the price to the channels that you draw. Do not force the price to the channels that you draw. Don't say, since I have drawn it like this, prices must come to this levels or this area of the market. If not, like, look, 1, 2, 3. This fourth one, the prices did not get to this level here, did not get to the line that you drew, right? But it's still on the upside and it rejected, right? Look, 1, 2. Price did not actually perfectly touch this trend line, but it's still what it is. Look here, week, right? Prices did not close here, right? Look here, weeks. Price did not get to the trend line, but it's still inside the channel. So get the idea, friends. You will not, all right, you will not see price do what you want it to happen in the market. The market will do whatever it wants to happen. Okay, so uptrend channel and all that. So how do you trade support and resistance? I think we've talked about this. So the bounce, trade the bounce. Once the market, trades to the support, right, and it's bouncing off, that is when you want to enter to the market. Okay, something like this. Look, we have a support line here. Prices have come to the support area right here, right, and it's bouncing off. Look at your entry. This is your entry, and what do you want to place your stop loss? Right here. Remember, this is the pattern, the bounce strategy. Once price has reversed, moved away from the support area, right, up like 20%, that is when you want to enter the market here. Okay, guys, so that's how to trade it according to what we are learning right now. And then if it's in a downtrend, right, if you traded the resistance, once its prices has bounced off the resistance level, right, the level where it bounced off, put your stop loss right there, and once it has moved down like 20%, get into the market, right, for an entry. Let's look at the chart right here and explain what we're talking about. So so let's use this one. Okay, prices previously was in an uptrend, right? It's coming up. Okay, so we know we are in an uptrend. Okay, and let's even go further like this. Okay, so we have one touch, two touch, three touches. Okay, so we know we are in an uptrend, right? It's making higher highs, higher lows. It's making higher highs, higher lows, higher high, higher lows, and higher highs, and it came to create it failed to create a new higher high, but it came to create a low higher lows right here, previous one, and it never traded back up. So let's say we now want to enter into this market as sales. Since the prices has broken these lows right here, we can then begin to say, oh, what is going on in the market? Okay, is it trying to create a new low, create a downward movement or something, right? And let's take our line down, and then if you are that very professional, which you are not yet, right, you can begin to understand that if prices break these lows of these previous highs, right, and it failed to create a new high, it came back down and broke this low further. These are 4-hour candles, my guys, and it also breaks this previous low again downwards, and prices come at this. Look at this candle right here. Okay, come back to retest these lows right here. You can begin to say, okay, good, prices has failed to move to the upside, and it has been coming down for a very long time, right? And now I can see this as a retest. I want to enter into the market, right? Just for example, I'm not saying enter the market like this, right? You want to learn more strategies about that later on, but you can use this and say, okay, I'm going to get into the market at this level or at this point right here. And you enter into the market, you enter in your sales. Okay, and then what happens? The market trades, found support here, came, found support again, and created a new low high. You can take a profit here and place your stop loss right here. Stop loss. Okay, so this is a sample, basically what we just saw in our baby pips tutorial. Okay, this is the same thing we just learned right here. We just learned right here. So trade the break. Okay, trade the break, and once it has broken the support or the resistance, trade it. And you can trade it the aggressive way, like just jump into the market, boom, right? But if you trade it aggressively, you might be fortunate, okay, because there's aggressive way of trading it. There's also a conservative way. You can just jump into the market and you find that the price is going to your direction and you'll be profitable. You kind of find successful, right? It plays out very well. However, the conservative way is that you find yourself when you enter into the market, right, and maybe you enter too early and prices start to rally back up to you. So let's say you entered the market right here, this candle, just look at this 4-hour candle only here. Okay, and what happened? You place your stop loss somewhere here. Okay, and prices went down initially. Prices started, instead of going downwards, prices came up first, because we see a wick here. It came up to your entry. And sometimes it happens. Look at this. If you entered here, you would have been stopped out of this market. Why? Because price went to that entry. Prices came to this entry. Look at it very well. So if you enter the market here, right, for sales, let's say you enter the market here. For instance, it broke here, so price might have closed here. If you enter in the market like 4 hours, 3 hours, right, you entered here, right, prices came down. Let's say you entered here, for instance, this one here, and prices traded down. You find out that price come back up, stop you out, because this is a retest candle, right, before finally going down, down, up again, down, up again, down, like that. So friends, this is the conservative way. What will you do? Let's say you entered the market here, prices was going down initially, and all of a sudden it reversed, came back to your entry. Will you move your stop loss to somewhere here? What if price gets close to your stop loss? What are you going to do? Will you move it right here? What if price almost gets close to you? You are in loss, remember, right? And finally, what happened? Sigh of relief. Price starts to fall back down again. All of a sudden, it just came down. Boom, to this point. Went up. Boom, came down. Went up again. Boom, came down. Went up again. And then it finally came back down. This is how the forex market works, my friends, fellow traders. Okay? And so, if you failed to enter the market here, right here, you can enter again at this point or at this point. This is exactly how the forex market works. Okay, so let's us move ahead in our lesson. Okay, I think we've pretty much covered it all. Support, when the prices break the support level, right, and it's falling back down, right, you enter with your stop loss ahead. Now let's read this very important information here. It says, in forex, this does not happen all the time. Retest of broken support and resistance levels do not happen all the time. There will be times that price will just move in one direction and leave you behind. Because of this, always use stop loss orders and never ever hold on to a trade just because of hope. Okay, so if price leaves you, right, put in your stop loss, and if it hits your stop loss, leave the market. There are many other opportunities, okay, out there in the market. Again, you find another trade that is good. So summary, trading support and resistance. In summary, right, one thing to remember is that support and resistance levels are usually not exact numbers. They are areas in the market. Okay, they are areas in the market to help you filter out these false breakouts, because the market might break, you might think that it's going down and it comes back up again, right? To help you filter out this false breakout, you should think of support and resistance levels as zones rather than concrete numbers. Okay, so support and resistance can reverse rows, exactly, right? They can reverse rows like we discussed. I mean, I just showed you with the aid of this candle right here. I mean, we really did not do that, but if it's in a trending, I mean in a ranging market, you can actually see that support and resistance reverse rules. Let's use this one as an example. Okay, as an example, so let's say we are here. Okay, we know we have identified that we are in a downtrend, okay, by using this right here. We have identified that we are in a downtrend. Now you want to trade the market once support has been broken, right? Okay, so where is your support? Right here. We can draw our support level here. Okay, and we can draw our resistance level here. Mind you, we know this is a range from the downside. So if somebody, or if you being a novice, enters into the market, took a sell here, right, market came back down and broke, you see this wick red, right, it actually broke it like this. You might be like, ah, man, it has finally broken, so it's going down, and you might lock in your profits or not lock in your profit. And what happens? Price was pushed back up again, and it closed in this support right here, and prices went back up and found resistance, and it started to, you know, up down, up down, up down, up down, up down, right there. And so let's say it finally came to this level, and if you enter the market here, and initially it was coming down, right, what you will see is that all of a sudden price will just right back up, close you out. Imagine everybody who took trades here, sells at this level right here, Now see what happened. Price rose back up to this high, this and this, taking out everybody's stop loss. And what happened? Finally, it went back down, started going down. This happens all the time. It has happened to me several times. Okay, so it will happen to you as well. However, if you take your time to study, to learn all this we are showing you, we're going to show you how to enter into the market very well and comfortably as well. But that will be in the advanced courses, okay, not in right here. So trade the break and the retest. Make sure it has pulled away, you know, from the support level or the resistance level before you enter into the market. Okay, so here's our support level. Price fall down, okay, broke the support area, right? Price traded to the support area, and then prices went back up to retest this area right here, because it's very important. And prices could not break above, but rather prices started falling back down. This is when you want to enter the market. Here, whenever, because you know it has tested this level, this area previously. It failed to go above it, and rather it came back down. Okay, so you can enter the market and all that, and so on and so forth. That is how you trade the support. Okay, when support is broken. If it is resistance, the same thing applies, just the reverse of it. Price of the market was coming from the bottom, okay, boom, and it broke the resistance level. To confirm that this is a true break, wait for prices to come back down to this level, this highs which it broke, to retest it. Okay, if it finds support and starts trading up again, then you can enter the market here, because you have confirmation that this level is holding support. Okay, so that is basically in summary. Now our trend lines, we have discussed how to draw our trend lines. Do not force the support, do not force the parallel lines. This is our downtrend. This is how it looks like. And we have also said we have 3 types of trend: uptrend, downtrend, and the sideways. And we also learned how to draw channels as well, and we also learned how to draw the downward channel. And we have also talked about how to trade the support and the resistance, trade the bounce and trade the break. If it breaks it downward, wait for the retest and go down. Okay, if this is your support line, this is your support area, right? For instance, and price came and broke the support area, right? Wait for prices to come back up, right? Fail to push up, and once price starts to push back down, that's when you enter into the market here, and you can put your stop loss right here. Okay, here, because we have hope price is going to go back down, come again, back down, come again, back down. That's price. That's how the market works all the time. So this is our entry, this is another of our entry as well, guys. So I think we have concluded this section. Okay, we still have some more examples of support. When price breaks support, this is how it is. Wait for the support to break, wait for the pullback, right? Price to go back to test these levels again, which as we have discussed, right? And wait for price to pull away from the support level. Once it starts pulling away, that's when you want to enter here and put your stop loss here, exactly as we have talked about. So this is how it is, and we have concluded the support and resistance level, and I'll see you in the next section, which talks about Japanese candlesticks. So guys, if you like this video, please smash the like button, subscribe, and until next time, take care.